The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials right now up 76, NASDAQ up 34, S&P's up 10, gold contract up 990, trading at 1311. And that contract, folks, when it's up, it was actually up there yesterday. What you're looking at there is that when you have the pit close, that's what's going on there. So it's not like it's up another 10 bucks. Silver's up 15 cents, trading $15.47. We got the notes and bonds. Guess what? All new 12-month highs. Bottom line, higher price, lower yield. They just won't stop. They've been the most consistent in the marketplace, too, for consistency of that trend. And that trend is up with lower rates. We got the 10-year right now up 2 at 123.15. 30-year is up 7 at 147.06. And King Dollar. The fight is not over in King Dollar, folks. It's up 464 ticks, trading 95.665. King Dollar came down yesterday, had volume, but guess what? Flipping right back topside. This bull and bear battle is still out there. The euro is at 113.88. The yen is trading at 110.75, and the pound is at 131.66. Tom O'Brien, what's going on?
Good morning, man. How we doing?
We're doing good, man. And, you know, the doves are flying all across the whole United States this morning, man. There's no doubt. Bottom line is that notes, bonds, they're up. The dollar's still fighting it out. And we'll see where these equities want to go. And for that, folks, let's go over to our man, Mr. Kevin Hinks of TD Ameritrade Thinkorswim, as we do each and every Tuesday, Wednesday, Thursday. And don't forget, folks, right here, every trading day, 11 to 12 Eastern Standard Time. You want to understand the option market, option strategies, as well as futures. Kevin's got an outstanding program. If you haven't test-driven yet the Thinkorswim platform, real easy to do. If you want to be the bid, want to be the offer, want a professional platform, folks, that's where you want to go. TFNN, hit the TD Ameritrade banner, bring it up. They'll allow you to trade paper money, and you can trade right along with Kevin and his team. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. How you guys doing?
We're doing good, man.
Morning, Kevin.
Pretty amazing day yesterday, wasn't it, in the afternoon?
There's no doubt. And, you know, the note and bond market, it just blows my mind. I mean, you know, bottom line is that the bull is still alive since 1980. It's like, okay, if you ever told me this 7 months ago, I'd say, what are you talking about? I think we're going to be at 3.2. And we're at 2.5, you know?
Yeah, exactly. I mean, we said on this show yesterday morning that I wasn't sure what stocks were going to do, but bonds were going to move.
Yeah.
You were going to get some volatility out of bonds, and you certainly did. And that drove, I think, a lot of the movement that stock did. How about the recovery, though it was short-lived, in the E-mini futures right after that announcement? Boy, they spiked up. But you were mentioning something, Tom. They killed the U.S. dollar. How about that move?
I know. And then, you know, and it's so deviant, right? Because when I woke up this morning, the first thing I looked at was the dollar, right? And I saw it up again. I says, oh, my God. I says, this battle, it's a battle extraordinaire because it's been going on since October 24th. So it's like, it's going to be great to find out who wins. I mean,
yeah. It's a 15-rounder.
It is, man. It is. Well, you know, and it's the NDX 100. I mean, look at Apple out here this morning, right? It's kind of intriguing. You know, my take is always the NDX. You got to watch the NDX, man, because it can bring you up and bring you down. And you know, I don't know what's got a little fire under Apple this morning, but it's had a good fire since going back to March 8th, man. You know. And
yeah, I mean, look at Apple. I mean, Apple got down into the 140s, Tom, in December. Yep. It's $50.
I know.
It's low.
I know.
And now it's getting some momentum here as it goes. Remember, ahead of this, I believe it's March 25th, right? Is their meeting where they're expected to release probably a streaming TV service of some kind. So yeah. There's some anticipation going into that for sure.
Yeah, and you know, this is the first time. You know, it's funny how fast time goes, Kevin, right? But this is the first time that Apple has actually generated, I'd say, some real excitement.
Right.
You know, that I mean, remember years ago, every time that they're coming out with something, man, Apple would be driving higher. You know what I mean?
And all you have to do, Tom, is look at the March 29th options expiration in Apple. And look at the implied volatility surrounding Monday's announcement.
Yes.
It's like an event. The implied vol is going up. They're going to have an expected one-day move off that event based on the implied volatility of the options. So you got to trade Monday and pre-Monday like an event in Apple.
How cool is that? And folks, this is the type of education you get if you're listening to Kevin and Tom at 11 to 12. Okay, and it's really so cool because what Kevin just brought up there, it doesn't matter whether you're trading Apple or not. What matters is that there's going to be an event, and if you're trading the Qs, you better understand that.
Right.
Yeah.
Right, and they'll be, once, it's hidden, right? Because on the TD Ameritrade platform on Thinkorswim, it won't show an expected move because the front today, tomorrow's expiration is lower than that second expiration. But once these March 22nd option comes off the board, it'll show that move expected for Monday, and you'll see it right on there. So it's pretty interesting the way, but that's an event just like an earnings event, just like anything. When Apple has these scheduled meetings, that option implied volatility perks up in those names.
Yeah, no doubt. And, I don't know if you've seen it yet, Kevin. Now this is really unusual, folks, okay? Biotechs take a hit, okay?
Yeah.
But Biogen, this is one of the largest biotechs out there, and my God, it took a 25% hit this morning.
Well, you know why, right? I mean, they basically canceled all their work on Alzheimer's treatment.
Yeah.
Yeah,
Wow.
They basically scrapped it, which a lot of people waking up today, that's pretty bad news or sad news for a lot of these people because Alzheimer's and dementia,
it is.
They were working on that. So, yeah, they were hoping to make some breakthroughs, and they've not only not making breakthroughs, but they basically halted their treatment.
Right, I know. Sad. Amazing, actually. That's
what these biotech companies that's what they live by, right? The drugs that they're in their pipeline.
Yeah, there's no doubt. There's no doubt. And I guess I've seen plenty of smaller ones go like that, but when a large one goes, it's like really. But it's that dramatic. I mean, everyone's been working on some kind of either a stoppage or a cure for that for so long, and it's so important, man. And
right. And although there's a lot of things surrounding that topic of Alzheimer's and dementia, nothing official yet.
Right. No doubt.
Yeah. So
it's going to be wild out here, and
big move there.
Oh, big move. And we'll see where Brexit's out of the deal now. It's going to get interesting, Kevin, to see that. Okay, we know there's no more interest rate, this year. So it's like, okay, so
right.
Today it's saying, okay, I'm happy with that. We'll see as we go forward.
Yeah, he basically went a lot more dovish than we thought, Tom.
Oh,
but
yeah.
Here's the other thing that I think caused some hesitation in this market is he lowered GDP, he lowered inflation, and he raised unemployment.
Yeah.
Going forward.
All right. Folks, right here, 45 minutes from now. Kevin, you have a great one, safe one. Have a great weekend, man. We look forward to speaking to you next Tuesday.
Great seeing you guys.
You too.
Thanks, Kevin.
Stay right there, folks. Tommy and I are coming right back. We have the Dow up 74, NASDAQ up 37, S&P's up 10.5. Come right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We have the Dow Industrials up 67, Nasdaq is up 35, S&P's up 10.5. And, you know, Tom, we were just talking about that Biogen, so let's go over, take a look at this. This is pretty intense, man. I mean, and as Kevin said, for the people that, you know, have someone that has Alzheimer's, dementia coming into it, it's really sad.
Yeah, very sad. I mean, looking for that, you know, glimmer of hope that at some point, right?
Yeah.
Technology and healthcare will find something, but it's a bummer when you wake up and they say they're not going to be the one.
Yeah, and you know this is about as intense as you get when you get a company this large. I mean,
Yes.
just to give you an idea, folks. Okay, you know this is not, you know, today it's a $45 billion market cap.
Yeah, just shaved 30% off, right? So
Yeah.
Yeah.
And, you know, if we take a look at this, what you're going to see, and this is, you know, you're going to see, you get a consolidation. When we get that nice spike going back in July of 2018, you're going to see that's 57 million on a monthly. Well, you're going into 67 million, and that's a tight call. I mean, it's not that bad how it went into it, you know, and then it just couldn't hold it. And now what you're going to have, this thing's going to go after the lows, which is 205. That's pretty intense, man. It's really intense waking up on one day. That's like, you got to be kidding me, man.
And especially, you think some of the smaller biotechs, you're always very open to that type of volatility, right? Where they're just hinging on one drug or whatever it is. Maybe they're a $2, $3, $5 billion company. Not so much when they're a $60 billion company, but it just shows how important some of those just individual drugs and you know, developments are to some of these companies.
Yeah, no, and that's my point. That I you know, I expect that, just as you said, on the smaller ones, I wouldn't expect owning a Biogen to wake up in the morning 25% down.
And that's where just some of the fundamental aspects of these biotechs, man. I mean, you know, if you really had a concept of this company, I guess, you know, some of the analysts, they might have been aware that it was that important, but even that, I mean, you know, to drop 30% in one day for a $60 billion company, that's pretty remarkable that's how much was factored into that stock.
No doubt.
On that premise. Yeah.
So let's look at Apple. So, you know,
Yeah. On the flip side, right?
yeah,
Trading higher.
on the flip side, and you know what had happened, folks, is that we were talking about this. Apple was an ABC up. Apple had taken the B point out on March 11th. So you know your B point is 175. Your A point is 142. So 52. Yeah, you get 33 bucks, which gets you. That's 202, and you're at 193 right now. And then what you have with Apple, now this is what's pretty cool if you look at this. You're going to see the last time, and this is where this sets up really nice, folks. The last time that you really had volume on the way down happened to be November 2nd of 2018. And the low of that is 205. So it's pretty wild, man, when these things set up so dramatically, meaning you get an ABC structure that's almost, 202, 203.
Okay.
You get the supply line that starts at that 205.
Yeah.
If I bring this back, I'm going to put this on a week.
And what's also interesting is I think they become a $1 trillion company somewhere around 207, 208.
Oh, do they?
Yeah.
Wow, okay. This is quite a comeback, though, man. There's no doubt.
Oof, man.
Yeah.
I mean, percentage-wise, like you were saying, right? You're at 140. You're up $50. So $14 would have been 10%. So you're up more than 30% this year, and it's only March 21st.
Right. And that's going to be, if that's where we get to, if you get over the 198, into the 202, that's over a 0.618 retracement from the lows to that 202 number. And that's quite a feat. There's no doubt about it.
Definitely.
Yeah, so we'll see where that goes.
Yeah, and like we were saying, when is the 25th? Is that Monday that they do that announcement? Yes, it is. Monday.
Monday.
So there'll be... Everybody get ready for Apple streaming TV, right? The next competitor to Netflix. It'll be interesting to see how Netflix reacts as this all comes down too, because they're just going to be, Apple's going to be plowing money into original content in a similar fashion. Now they're packaging other deals as well, right? But they're going to be in that same game.
Wow.
Yeah.
Everything. The TV business has definitely changed. I guess they're going to start talking. Well, actually, it's already happening. People call it the streaming business now. Really, right? I mean, yeah, because there's the TV, right? Is a changing dynamic. As in computers are now tablets. Tablets are your phone. Your phone's a tablet. And they're all where you can watch high def, 4K, etc. movies. Yeah. Yeah. So if we go over to the dollar, folks, check this out. I mean, I knew this wasn't going to be over yesterday, too. I'm saying to myself, we're going to follow through. But
you were telling me, I remember. Yeah,
and it's like, so yesterday, folks, really, we come down with volume. And, yesterday, Fed come out, 25,000 contracts on the way down. Breaks the swing point, okay? So that's saying, okay, wants to get down to this 94. This morning... Now, it's still lighter volume, but the bottom line is not, it's the bulls and bears, well, the bulls aren't giving us up, quite yet. So you're up, you get 12,000 contracts, but what it's done again is that it's gotten the higher range, not the high range, but it got over that swing point that it broke yesterday, which is a 95.240. So it's like, okay, man, And if we go over, let's go take a look at the euro, because it was the euro that broke topside. Yeah, see, the euro just gave it back, too.
Sure, yeah.
The pound, we take a look at that pound out here, and the pound pulled back too. So both of those basically pulling back. It has put some juice into the dollar index.
And how about rates? Can you? Because we still got. I see the 30-year up 13 ticks, 10-year up 3 ticks, and where we are, I know we're at. 12-month lows, to say the least, right? I see it 2.514.
How cold?
And if you can stretch it to the year, because that's going to be the low, right?
Oh, it's going to be the low. The low's out there this morning.
Yep.
And, folks, this is, I'll bring the chart up, but this is about as good as you can get to really understand this bull market that started in 1980 is not over inside the bond market. What we did out here this morning with the 10, we took out the 123.17. It's going to have the volume. And what's intriguing here, this could be a monster ABC up. Watch this. I'll bring this. I'm going to bring the 30 year so you can see. Oh, here, I can do this first. This is intense. So
perfect.
This chart here is going to give us the yield curve. No, the yield, okay, which I haven't brought this up a lot. I just found this chart yesterday, actually.
Cool.
And what you're going to see is that we just broke the January 3rd. January 3rd, 2.5429.
Wow.
Now, this is where this gets wild, folks. If this is an ABC down, which yield down, price up, you got your A point on this is 3.2. Your B point is 2.5. So you get, what, 0.75, right?
Yep,
And
7/10 basically.
7/10. That's going to get us to a 2.1.
Wow.
Now watch this. This is really cool. I'm going to bring this back, and you're going to see that, guess what? That next swing point is 2.1.
There you go.
Crazy, man.
Yeah.
2.1, folks. Get that
Free money, baby.
Get that refinancing ready.
Definitely. Real deal. Totally.
Oh, it's a real deal. Stay right there, folks. Tommy and I are coming right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tom and Tommy O'Brien, we do appreciate you growling and prowling with us out here. Market-wise, you get the Dow up 76, NASDAQ up 46, S&P's up 13. Let's go over to the small caps and take a look. So the small caps, folks, still the weakest indice. That being said, guess what? You're going to bounce out in the IWM. Yesterday, we go down with 29 million shares, which is big volume. We're up with 5.6 today, so it's going to be intriguing to see if it can, that number can hold, because that's pretty good volume on the way up this morning.
Yeah.
You know?
Yeah.
And we'll see where this shakes out, because what the small caps have done is that they're kind of right where we started on the way down yesterday. You know, these bounces, man, are pretty wild. Particularly, it's going to be intriguing, Tom, to see what the market actually thinks of a rate environment that's flat for the rest of the year.
I know, right?
Yeah.
I said to you yesterday, I said, pretty remarkable that they could surprise so much to the dovish side when, you know, Chairman Powell had already been so strong to let the market know how dovish they were going to be. But guess what? He came out a lot stronger, and the Fed governors came out a lot stronger in their announcement yesterday.
Yes.
For sure.
Yeah, and see, watch this, folks. We'll put the dot plot up, and you'll see how pretty amazing this is. So when you're looking at this plot, this is as of yesterday. And the thing that's pretty wild is that you still have, well, it looks like 4. We're at a 2.25.
Yeah.
No, 2.25
Yes.
to 2.50, right? That's where we're at.
Yes.
And you can see, you know, the plot has it. Oh, that's 2020. Oh, that's 2020. That's right. That's not. So they have it at 2020 that you get one rate rise, and that's it. And then 2021. This is like stability, man. This is going to be really wild to see what does happen here, folks.
Now, can you hit the previous there
I can.
to
Yeah,
compare it?
This is crazy. Oh,
No.
Nope.
You just got to hit where it says compare with.
okay, 1 second. Oh, I got it. Okay.
You just hit previous. Click on previous.
Oh, perfect.
There we go.
Oh my God, look at that.
So that is really cool, where you get to compare to where the dots were, which is the gray,
Yep.
which reflects the December 19th, the last time they had dots, versus the shift you see with now the yellow. And you can see how there were so many dots higher previously, and just looking at that line, right, that kind of pops the median estimate, how much dramatically higher in terms of almost a full 0.5%, it looks like, across the board almost. And you don't get back to, you know, long term is kind of where they both kind of bring it back, but pretty cool.
It's amazing. And listen to this stat, folks. So this is quite a stat. That since 1970, whenever the Fed has not raised rates for a full year, and on top of that, saying that they are going to raise the rate the following year, right?
Okay.
3 separate times this has happened. And each of those 3 times, the rate went down versus up.
Oh, boy.
Isn't that wild?
Yeah.
Since 1970. Now, guess what, folks? The 4 words you never want to use in the marketplace is that is this time different.
Yeah. Right.
You know, but it's something to keep in mind. It really is. It's like, because, you know, when you look at the Fed, you know, it's like the market, the note and bond market, no doubt were correct the whole time, this whole last year, saying rates are not going up. You know, they kept buying it.
And how about the Fed funds? Sorry, as you keep going, just the Fed fund futures is just going to almost confirm what you're saying, right? Because that has a more of a cut priced in versus any realistic nature of a hike.
So watch what they did today. I just put this up, folks. This now, after the meeting yesterday, there's not even the way that it's skewed right now. That it's all to a rate cut. There's not even a rate hike in here.
0.0% chance of a hike.
Yes.
All the way through 2020.
All the way through 2020. Now, a rate cut, folks, gets into 24% in September.
Amazing.
It really is. I mean, when I first looked at this yesterday, I says, hold it, where's the rate hike? And I says, oh my God, hold it. There's not a percentage chance of a rate hike at all.
And they have, I mean, pretty much almost a 50-50 chance as we come into the beginning of 2020.
Yes. Right.
Yeah.
Right. So it's
Which is not that long ago, long from now, 9 months.
No.
There's a 50% chance we'll have a cut, which is just remarkable.
I know, and it cutting from a low rate environment, right?
Yes.
You know, but you know, when we look at this, folks, all you have to actually still do is you look around the world, and what you're going to see is that, you know, it makes 0 sense to me that, okay, we're at 2.5, we're in a 10-year. France is at 0.4%. It's like Germany is at, what's that, 0.04%.
Yes.
That's like, really?
Yeah.
You know, Switzerland is at a negative 0.5%.
Yep.
So, you know, when
The only thing to keep in mind is, like, on a day like today where you're getting a dollar spike higher, you want to borrow dollars and you want to pay back dollars, you better not have you know, that currency play, as in, you know, that's where things come into play for sure.
Oh, there's no doubt.
Yeah.
Because what happens, folks, is that, you know, if you just look at the markets in general, what ends up happening is that, like, let's say that you were in Europe and you bought the Dow Industrials, right? Well, the bottom line is that that's awesome in the aspect that the Dow has gone up so dramatically, but what you have done is that you've lost 30% on your currency.
Yeah.
You know.
Can you put that chart right there? It's in dollars. Can you put that in
yeah,
euros?
I can.
Yeah,
There,
let's see what.
there we go.
Nice.
Yeah. And
Okay.
because what happens is this. So the correlation would go. Well, they've lost it anyway. Because if I take the euro and you take the euro and we go back to even just 2 years ago. Actually, I got to go back further. You know, if we go back to 5 years ago, we were at $1.36. Now you're at $1.13.
Sure. Right.
You know, if you're really talking 2008, now you're talking some disaster. At 153 to 113. So
yeah, huge.
it's intriguing how the currency moves are really important as the correlation of where do you have your assets. And as long as if you have them balanced out, meaning you could swap out as long as you're not trading those currencies across borders, meaning that, let's say we're going to Europe. Okay, well, great. You know, if that money's going to stay in Europe, well, you have a certain amount of money and you spend it in Europe, that's great. You just don't want it to cross the border. Because as soon as you cross the border, you know, guess what, folks? Then you are trading.
Yeah, then you got to trade into your next currency and see how you do from there, right?
Yeah, exactly. Yeah. Micron came out with numbers last night. This is getting a pop out here this morning. That, you know, you're up $3.50, $3.80. And it was interesting, too, because when Micron, you know, came out, there wasn't a large pop out here.
Okay.
But bottom line is that they had made their numbers good. The estimate was $1.65. They made $1.71.
Yeah.
Revenue, 5.83. They did 5.84, you know.
Not bad.
No. And they got a pop out there. But these are down pretty dramatically from their highs. Like Micron's high is 64. Your store's 43.
Yeah.
Stay right there, folks. Tommy and I come right back. We have the Dow Industrials up 77, NASDAQ up 47, S&P's up 13. Come right back. If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 78, Nasdaq's up 49, S&P's up 13.5. Let's go over to our man, Mr. Jack Gleason from MajorLeagueTrading.com, as we do each and every Thursday at 40 past the hour. Jack is back in beautiful Chicago.
I'm the worst person you guys have on. I was so inconsistent. I feel terrible. It's half the time I'm like, I got a lot on right now, but lucky for me, I'm like pretty far away from my entry, so I'm not doing too much management here. But hey, your buddy Gold, who caught the bid, man?
There's no doubt. We had a bid out there yesterday, you know, and we'll see where this goes. We had volume behind the move. There's no doubt. And, you know, this dollar is trying to make it again, you know. My take is that we're still going higher in that gold market, Jack, but they're not going to make it easy. Do you know what I'm saying?
They never do. And then when they do, it's super easy. So my opinion on gold right now, if we can get above like 13.13 here, we're gonna continue to trend higher. We just need to crack this 13.13 level here. I'd like to see it break above in the next hour or so, and I believe we'll probably be back up towards the 13.20 level come tomorrow if we can do that. But yeah, this is we're starting to approach some pretty important support levels. If we begin losing basically the highs we broke out of, I'd be a little more concerned. But I did just get long some gold futures contracts down here, so we'll see if that works. But I mean, man, so no interest rates being raised, is that the deal now? That's
the deal, man. It's almost incomprehensible, isn't it? I mean, but that's the deal, and it's going to be intriguing watching. You know what happened, folks, is that you had the bond market not only confirmed it, it's confirming it today. The rest of these markets, they kind of don't know what to do with it just yet, I think. Do you know what I mean? Well,
yeah, it was really interesting, like the whole trade. So we come out of the interest rate raise. I mean, we were trading in the S&P 28.24. We rotate all the way up into like 28.48, 28.50, and then Powell gets off the speaker booth, and then the bids just dropped.
Right.
And then the overnight session, we make a new low, just take out anybody who had their stop below lows in the futures, and then right off the open, here they come again, like Powell's still up there on stage speaking. So, I just really see that whole move down as a big, screw you, like to a lot of longs, especially in the overnight to futures traders.
Yes.
But this continuation back up here today, guys, I got to say, I think the S&P is going to be breaching highs tomorrow. I think we'll be taking out the high of Tuesday, and I think we'll be making our way up towards 28.66 and then 28.76. But I mean, look at Apple today; it's up $5.
I know.
It's just the tech is leading, and I want to see gold rally with it. But for the Nasdaq guys, I'm looking at. Is it possible for me to screen share? Do you guys ever do that, or you just stick with the face?
No, do it. Do whatever. Yeah.
I was gonna say one of these days.
Whatever you're doing. Yeah.
Okay, cool. Let me show you.
I think we can. We'll see.
Yeah, you just won't be able to.
Give it a shot. Yeah.
We'll give it a shot. All right. See my screen?
Yeah.
All right. So this is a sequence I have here. I'll just clean it up a bit. It's my high to high extension sequence right here in the Nasdaq. Yeah. So basically the high we broke out of going back to March 4th to high pulled back into its 38% retracement this morning. So I'm looking for a negative 23% profit target up here at 75.16. And, you know, the fact that we've already breached through these highs, I'm really anticipating that to complete fairly quickly. So I look at the 4 indexes. Like typically, I don't know if you guys ever see my screen, but this is what I look at. Russell, Dow, S&P, NASDAQ, gold, and then normally this is oil. I just switched it to the dollar because we were talking about it. But one of the best things about trading the 4 indexes is you can always gauge what's the strongest market and what's the weakest market. I mean, today as a percentage change basis, we have the NASDAQ's up 0.61%, but it's the only market breaching the prior day high. The Russell's actually leading on a percentage change basis. So I'll always take that into consideration when I'm specifically day trading, because I'm like, well, if we're heading lower, what's the weakest index? Let me look for setups there. And, that's kind of how I go about my day. But
totally makes sense, man. And it's going to be intriguing, this S&P, because, what Jack is saying, folks, okay, this is a very, small pullback. I mean, in the aspect of, where we've just gone the last 2 weeks. The S&P was 27.26 on the 8th. And, on Tuesday, we're at 28.58. So the battle is still laying right out here. And, and in the battle, I mean, you see that bar, Jack, from the 10th. The 10th, that's when the S&P went from that 29.05 to 27.98 in one day.
And you know what? Today kind of reminds me of that day. So, as I normally like to buy pretty aggressive pullbacks or, within trend. But if we go back to that day, let me find the right chart. I mean, there was not a single pullback. I think I counted that day back bigger than 4 points. So that was Monday right there, the 10th and the 11th, right? Yeah. This thing right here. So, it was just straight up off the open. The previous days move was all down, and it's like, I'm not a big fan of trend lines, but like when they're this obvious, they're pretty good, right? So we cracked that trend line, and everybody who hedges their entire books on the way down like they do with the S&P futures, well, you got to take off those hedges, and then you get that really, really big move. So I think we got nothing but higher prices here, pullbacks along the way, of course. Right now, my ideal entry into this trend would be a high here from the morning before we broke out. So 28.21 would be my Fibonacci anchor drawn to the high, and then this would be a more aggressive zone on a pullback. It's 34.25 would be what I'd like to get into, and then I'm gonna try to hold on to that up until 47. So that's what I got planned here today for my trade plan, and I really want to see if we can't get above 13.13. Gold maybe have a little bit of a leg lower, but if we can get above 13.13, guys, I think we can start scooting back up towards the end of the day. It would just be amazing to me. But of course, like, news never makes sense to me anyway, that we could have 2 interest rates off the table raises this year, and then gold obviously has the proper reaction that everybody would assume it to be, which is higher, and then it doesn't continue. So that would be I don't think that's going to happen.
Jack, so when this happened yesterday, right, gold got the bid, right, and we were talking about this a little bit earlier, and then so Tommy and I are at one of the trading desks, and I says, man, I'm telling you, man, this thing's going to take one more hit. It's like, because what I mean by that, right, folks, we hit 13 to 26, but guess what? We're at 13.17 right now. It's just how it likes to trade. I don't know if it's pretty wild, man. I mean,
yeah. I mean, it gives a lot of opportunity, but you got to be like, that's how I like day trading. You got to be able to flip the trend in the middle of it, because you'll have these. I think it was like a 21 point move out of the lows in gold, which is pretty big.
Oh yeah.
Relative range we've had, and then boom, we're down 9 off highs right now. I think might go 10 off highs. That's the halfway back, right? So bid it up, pull it back, stop them out, and get it going again.
Get it going again. You gotta love it, folks. You can reach Jack every trading day. MajorLeagueTrading.com. Jack, you have a great week, safe week. You stay warm, man. We look forward to speaking to you next Thursday.
You too, guys. Take care.
Thanks, man.
Thanks, Jack.
Stay right there, folks. Tommy and I are coming right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So let's go over and take a look at Amazon. So just coming across the tape out here, so Amazon's up 470. So Amazon has hit a new way to grab a chunk of the digital. Here we go. Okay, so Amazon has hit a new way to grab a chunk of the 129 billion digital advertising market, now dominated by Google and Facebook. They are going to be selling video spots on the e-commerce giant smartphone shopping app. Amazon has been beta tested the ads on Apple's iOS platform for several months, according to people familiar with the plan. Similar product for Google's Android platform is planned later this year. Going to be pretty wild watching this shake out, man.
Yeah, it definitely. And you know, I have the Amazon app on my phone, so that's something that I'm sure millions and millions and millions of people they will be able to reach instantly.
Yeah, and
I mean, look at that. So Amazon's emerged as a fast-growing challenger to digital advertising since it captures 50% of all online sales in the U.S.
Wow.
Seriously.
Yeah, it's like, why do you even need, you know, Google and Facebook when they're shopping? You're on Google and Facebook to go buy something on Amazon.
Right, and say the brief video spots are going to appear in response to search results on the shopping apps, right? So you search for something, and then boom, that's when you get hit by an ad. It seems like a perfect spot that advertisers will want to hit you up right as you're searching for something to buy.
Yeah, That's wild, man.
Yeah.
And, you know, Amazon doesn't even break those numbers out yet, folks. They're growing exponentially percentage-wise. And any of us would love it, but we'll see how they start breaking that out in the future.
And look, they only have like 7% in Google, and they got like 37, 38%. So, yeah.
Stay right there, folks. We got Fast Market coming up next. Then we get our man, Mr. Basil Chapman, Steve Rhodes, Dave White. Be back this afternoon. Thanks, pal.
Thanks, man. Love you.
Love you, man. Stay right there, folks. Fast Market coming right up.